Good morning, traders, and welcome to another session where I, as the CEO and founder of Per Diem Capital, a proprietary trading firm specialized in futures, will be going through our own evaluation. I'm trading a 50K account, so I have a $2,000 drawdown. I need to reach $3,000 in profits overall. I'm sitting right around $1,000 in profits now. And yeah, I'll basically go through the entire process here as you would go through trading at our firm. So from the trading the evaluation account to trading the simulated funded account, and then ultimately moving into the live account and managing the live account. And I will also show you the different strategies that I will be trading, my risk settings, my entire trading plan, risk plan, and so on, that you get a better idea of how I would approach it, or how I'm approaching trading a tight draw, like an account with a tight drawdown like that. So what I do first, before getting into the market and before placing the first order or getting the first trade idea, I will look at what the current trend looks like. I mean, on a daily, you can see that we've kind of been grinding around this price here a little sharply the past days. And let's now go into the 4 hourly so you can get a better idea. As you can see here, we filled the gap after the open Sunday night, pushed all the way from down here 410 through 600 to almost 700. So that is almost a 300 point move right here. Let's move into the 1 hourly. So first identifying the trend. We are on an uptrend. We've been grinding slowly away from 700 into 800, getting a rejection right here at 800 now. Now let's go into the 15-minute to get a better idea. All right. We're about to break through 50. And now let's go into the 5-minute, which is the chart that we will be mainly using to manage our trades and to manage the current position and look at the higher level. So in the chart where I will be executing is on the left. That's the 22 range chart. I'm trading minis, micros. And so let's check. All right, now we pushed through 50s into 60s. And with the first strategy that I will be showing you here is basically looking for breakout trades. Because I want to keep it as simple as possible, and breakout is also like the main strategy that I trade with my personal account. And here in the beginning, I'm just using price action, key levels, volume as my main indicators to get my data off for my trade decisions. So keeping it really simple. And as we go deeper and deeper into the series, as I always say, I will show you more indicators and more tools to use to get to get higher probability trades. So what I'm looking for is a potential break through 80, which is with a push into 800. So that is the first trade that I would be looking for right here. So we can see an increase in volume right at the 70s. I haven't placed my limit order right yet. So let me exactly place it at 80 by 5. My stop, I would place my stop at around 60. 59, that is where I would put my stop right here. And it's a pretty risky position because it's like entering quite early, right at the break. Let's now just wait and see. It just looked really good because I saw an increase in volume as we are pushing through the 70s and 80, the level that I was looking for to get a break. But as soon as we break through 80 again, I would move my stop closer to 70 because, as I said, it's a quite risky setup here. Because it's not 100% clear, and right after the open where there's usually a lot of usually still a lot of movement happening in both directions, right? But what I could definitely do is if we get a good break through 80, I could add onto the position. But let's first see. Let's first see what happens here. So the next time we push through 70s, I'd move my stop below to here to 65. As I'm not that confident anymore with the position. As I said, I entered pretty early. And it would have been better to enter with a pullback here into the 70s and a push away from the 70s, or a breakthrough 80 with a test of 80 and then away from 80. So these are the two moves that we could have looked for to get a higher probability outcome with this trade. But yeah, went into this position early because I'm generally confident and have my risk defined here with a 20-point stop. And as long as you have your risk clearly defined and you know what you're risking, you can take the risk. One of the most important things with trading, knowing what you're going to be risking. So we got the push through 70, close to getting the break of 80 right here. And once we get the break of 80, I will move my stop to 65. For now, let's just wait and see. And yeah, I wouldn't increase my risk. As I said, I wanted to add onto the position with the break of 80. So now I'm actually doing it right now, moving my stop to 65, as I said. But yeah, let's wait first. Okay, no, actually, that is pretty good. So if we get a pullback into 80, I would increase size, but move it really tight, stop here to 73. Doing that right now. Move my take profit right around 800 right here. Actually both. Yeah, but moved really like quickly against me right now. I got stopped out with the first position right here. Moved into the 70. Let's see if we can hold above 70. Definitely removing this limit order right here, because now we only have one open position. Yeah, and now let's just wait. So about to get stopped out here. Okay, got stopped out on a second position, and then I'm taking off this limit order. All right, so yeah, I wanted to take a little bit more risk here and increase with the break of 80. Move the stop to this low here, right around 74, 75. So yeah, clearly defined risk. But I'm willing to take a max risk of $500 today, so I'm definitely looking for another trade position. We're now down $257, so it's all fine. My trade idea with the break of 80s is still not invalidated, so I could theoretically go for this again, but for now I will wait. With a break through 50 and the price holding below 50, I would call this trade idea as invalidated. So now let's look at the higher time frames. So after some time has passed, I usually also like to look at the higher time frames again. I'm still really confident with the idea with the break of the 80s. So I would give it a last attempt. If we get a break through 80, I'm taking it. Moving my stop again to the 60s. Let's also open the 1 hourly. Yeah, definitely. I mean, generally, I like the setup. So I'm moving my stop now here to the 60s. Then moving my take profit into 800. Now that's the second attempt of this trade. I could add onto this position with a break of 87. So break of 87 would add onto this, and then I would have the max risk on, the max risk that I can basically take on the day. Now moving is the stop right here to the 70s. Second take profit a little bit above this, above 800. 810 is good. Moving my second stop to 70s too, because this move here against me was way too strong, way too quick. I don't like that. But actually now also going to be moving both of my take profits above 800 in case we do get a continuation, a move through 800 into 810 or even 820. So I'm moving my second take profit to 820. But soon also will continue trailing my stop loss to take out some risk, especially since I'm in two positions right here, which I'm going to do right now. If we break 84, I'm not really interested in staying in this position because we already broke through 90. And now if we break through 95, I would even move my stop to 84 so that I am completely at break even. But for now, just gonna wait. We still haven't broken 95. So we now broke that level. Now I'm going to be trailing my stop loss, moving it into profit soon. Definitely taking profit here off this first position if we move into 799 again. Now doing the same thing with my second stop loss, moving it into profit, moving into 96. Okay, and got stopped out of both positions. All right, now we're sitting at break even. So the first time the trade idea worked out, first time it didn't work out, second time it worked out. So obviously I could have given my trade a little bit more room here. I had around 20 points of risk with each position, so 40 points in total. And that was the maximum risk that I was willing to take. I closed this position earlier, but yeah. And then let's go into why I closed out here. I didn't feel that confident anymore. Here, as you can see, the wick, as we moved in 800, I saw like this increase in volume with the move to the downside. So yeah, this basically took my confidence in staying in this position. But it's likely that we will move higher. But I expected short-term pullback here. I mean, we actually got a pullback into the 90s. But now we're seeing that continuation here. So now we're sitting at break even on the day. So now we have the initial risk again for the first trade idea of 250, not trade idea, for the first trade attempt, for the first execution of $250. And total risk on a day, $500. So what I'm looking for here is a pullback into 800 and then a move away with volume. And then I would take another long with a break through 800 and 810. But we might see a continuation here already. So let's see. Our new high of day is 809. So putting 810 here on the chart. So I would be looking for, I would looking for an entry between 50 and 80 for the break to 10. So now in the second position, in the second breakout that I want to trade, I would like to trade the break of 810. And now I would average into this position. That is, what I will go for now, so that you can also see how I approach that. Because the thing is, when trading breakouts, there are a lot of different ways you can trade breakouts. And what I definitely also like to do is to average into the position. I mean, you can see there's not a significant increase in volume, at least now with this move down. So I would be looking to average into this position. Now I'm going one contract market here at the 80s. And with each key level that we move into, I would increase my size. And with the actual break, I will increase all the way to the regular size. So here with the break of 810, I would add 4 contracts. But let's see first if we get a move lower into maybe 750. And that is the beauty of trading micro contracts, because you can do things such as averaging into positions as I'm doing it right here. That will definitely help with risk. If I went long here with 5 micro contracts directly, or even 1 mini, that would expose me to a lot of risk. But now I'm in just 1 micro contract. So even if it moves 30 points against me, I would be just down around $70 on that position, which is not a lot. That's a risk that I can take. But imagine that with 1 mini. With 1 mini, that would be $700 just for this 30-point move here. So you can't really hold on to trades. So with how the price action currently looks like, it could happen that we break the lows here. What is the actual lower day? I know lower day is way way lower down there. We opened at 415. I could imagine a break of this level here, 720. But let's wait for now. Also, just that I have it on the chart, I will be putting the level 800 here. Because if you look at the 5-minute, that is the close of this 5-minute candle and the open of the next 800 right here. So one thing, when I average into my positions, first of all, I only do that trading with the higher time frame trend. So not short term. I mean, short term, we are in a downtrend. So you could say that I'm in a counter trend trade right now, going long here, right? But I average into my position trading with the trend, right? Instead of against. So now we're at the second key level. So it increased by 1 contract, but moved the stop for the second contract really tight below this level here at 48. So that in case we do move lower into what I said, 720, I just get stopped out here for a really, really small loss of 12 points. And also going to be putting the level 740. 700, what did I say? I mean, it's entire range here between 720 and 740. So I'll put the low here for me with 720. And then just, yeah, basically wait. Now we're already in a position with 2 contracts. Now we can increase all the way to 5 by adding 3 more. And I would add the 3 with the break of, yeah, either 800 or 810, depending on what price looks like. And this is now a little bit like the first kind of advanced step of my breakout strategy, which is not just simply looking to take the entry at the exact breakout point, but no, to average into the breakout. And yeah, that can help with multiple things. For traders that are pretty impatient, that is a really good practice as well, because you do not need to wait for hours or minutes or hours to take your first entry. You can already take your entry at whatever key level you have defined, and then basically average into your position and increase size once you have the most confirmation that your trade idea is valid and is playing out. This gives you a lot more room and flexibility and opportunity if you're not just tied to one price. Because imagine right here at 83, imagine I would have just went long one mini contract. I would have gotten away all the way into the 50s, 700 down. On a $2,000 drawdown account, that is definitely not good. Definitely not the thing to do. So what I will also do though is I will also then set stop losses. Now the first stop loss here at 750 is well placed. If we I wouldn't want a move below 60, then I would at least call, not 3, I need to define the right size, 1. That's where I would close the second position. The first position now, in case price moves against me. So taking out some risk after the first 10 points lost and taking off some more risk. If we get a move all the way into the 50s. But now we have a potential another breakout point, which would be 790. So that is what I will trade now. So now with this very nice pullback that we had here and the strong move away with an increase in volume now as we are moving above the 80s again, I would already take the break of, I would basically take the break of 790 right here. With a tight stop loss, would put my stop loss here at 766 for the 3 contracts. And yeah, because I definitely like this move here. But yeah, let's just patiently wait. We need to see clear breakthrough 790. Getting another pullback here into 80. Let's just wait. There's nothing we can do at the moment other than waiting. So if we now get a break, I would even move my stop to 72 or 71 right here, where our entry is. But because I would call my trade idea is invalidated if we break this level at least for the 3 contracts. So I'm basically taking out some risk. But I definitely like this break here, break of 790. So now placing my stop, and now it's time to look for take profit levels. I'll just take off all 5 because that is the full position that I then have here. I'm gonna move it to 820. This will be my take profit level. So and as we break the next levels, I will also further trail my stop losses, obviously. So pulling back into 80. Actually, now, I'm moving this stop because if we get a break through the low of this candle, right around 767, I would definitely call this trade idea as invalidated, because the probability is high that we get a move into the 50s again, or even lower into 20, as I said earlier. It's all about managing risk once you're in a position. Because there's no reason to take on too much risk if your trade idea is not valid. And I don't like this slow grind moves, this choppiness. And that is why I'd rather, take out risk than stay in a position that takes hours to completely form. Good, and that is what I will do now. I don't like the price action too much, so I'm further taking out risk by moving all my stops, all my sell limit orders to 772. And next will be 82 to take out full risk by moving my stops to break even. Okay, we got the push through 800 now. Moving into 810. So a lot of increase in volume. What I'll be doing now is moving my take profit away and trailing my stop, taking out 3 contracts first. Now moving all to here, taking out the 5 right here. Now we're stuck. We're still in one position and got filled on that position. Good. So I'm really happy that I can show you this example now. It's not every time that I get that I'm that confident to average into a position like I did here. So the first, let's do a recap. Let's first go into the performance dashboard right here. So we made $248, paid $43.50 in commission and fees. A 70% profitability on the day. And yeah, basically that is it. Let me close this. Now let's do a recap. So first trade idea was a break through 80 into 90, 800. That would be the two take profit levels. And that is the first trade idea. We needed 2 attempts. First attempt did not work out. Second attempt worked out, which brought us to break even on the day. So here, entering at 80, put my stop to 60 so that I have a 20-point stop. I usually take, my risk is anywhere between, like on average it's 25 points. The max risk, the average is 20 points. The max risk is 30. I cannot take larger risk than 30 points. So if a trade moves more than 30 points against me, I'll definitely invalidate it. The trade idea. So, that is critical, right? And I'm saying that over and over again. You need to have a definite stop loss, whatever. So place the stop, and as price pulled back to the 60s, almost hitting my stop, right? Just like 1 tick or 2 ticks, then points, and then pushing through the 80s with an increase in volume, right? And because of that, I entered my second position right here. Now I was in a 20-point risk, but because I didn't want to be in that large of a risk, I moved with like both positions. I moved my stop right here to 73, and that's also where I got stopped out on the first position, and the second one I got stopped out here. Obviously, if I would have left my stop loss here at the 60s, where I had it initially with this one position, then this would have been profitable. But yeah, that is how I manage risk. And I took on a lot of risk by increasing size because I doubled the risk. And that is something, first of all, that you should never do. I can do it because I have the experience. And I want to show you the examples of sizing up and averaging into a position because we're now in the more advanced levels. I think we have now 8 sessions already in this challenge. And I think it's quite, for myself too, quite repetitive to only show you the same setups. Getting a pretty nice push. Quickly need to go there. As you can see, new 5-minute after the new hourly open, and then we got a nice push through 820. It would have been some nice 25 additional points. No, 30 additional points. And now it's moving even higher. But whatever. I don't want to go into commentary here right now. Yeah, that's basically the thing. So yeah, I want to show you some other examples, and that is to the 2 new things that I want to show you is increasing size in an already profitable position and averaging into the position. So to make it more advanced now, the breakout strategy that I'm trading. So then second attempt, same idea, a break through 80, 20-point risk, moved my stop here. Then we got the break. We got an increase in volume. I added 1 contract, I added 5 contracts, doubling the risk on that position, but I was really confident. And then I took profit at 800. I saw this candle here with big increase in volume, and yeah, I was right that we would get a pullback, so I took profit right here. And then the second idea basically was to trade the break of 810, right? Which is playing out right now. I actually didn't trade the breakout of 810. I could have even further increased size, right? I could have added 5 contracts here with the break, but I wanted to stop now. I'm already 34 minutes into the session. And So yeah, so here I did the different approach, which is averaging into the position and then increasing with the break. So we moved into 80. That was a key level that where I previously went long with the break. So that is where I added one contract. And that is really important. If you average into your position, you obviously do not take the same size that you take if you're just trading the breakout as an example. And that is a big mistake a lot of traders do in the beginning. They think of, okay, let me now start averaging into my position instead of just going full size at the break as an example. And then, you might add 5 contracts here and 5 contracts down here. Obviously, with my trade here, it would have worked out perfectly, but that is a too large risk to take. So here I just added 1 contract, and with another 20, with another 30 points against me to the second level that I defined here, I added the second contract. This is all price action, right? And that's the thing. It's working out so beautifully. Sometimes it doesn't work out. Like here, I get stopped out, but then take some more trades and you recover. So then we had little choppiness here, popped up above 800, above 80, then with a move into 70. And that is like when we then moved into 80 again, especially with the new low we made here at 70, but then pushing through 80 again. That's where I was kind of confident, okay, I might increase size. And then we got a pullback into 80 with a break through 90. And that is where I was like, okay, yeah. And then you can also see an increase in volume right here, right at the break where I entered. You can see an increase in volume. And that is why I added 3 more contracts. And then as we moved into 810, which was the key level, I took profit because I was happy with taking that profit. Obviously, I could have let it run. As you can see, we went all the way into the 50s. And, but yeah, and that is the beautiful thing. That's what you can do all day. And if you're in a really, really, really strong trend day where you have seen that, okay, the past hours we've been just trending up and every pullback is being bought, then that is something you can do. Let's see, moving into 800, pushing through 810 again. So I would maybe add 3 contracts right there. Then into the 30s, moving pullback into 30, away from 30, breaking 40, would end some contracts right there. And then maybe with the break of 50 again. And you can do that, and that's the beautiful thing with trading micro contracts, because you can just size into the position slowly. And at some points you're maybe in a position with 100 micros, which is just 10 minis. But yeah, you did not just randomly enter full size, full risk at one price. No, you average into the position. And yeah, then beautiful trades like this one can play out. Good. Thank you for watching. If you enjoyed it, then click on the playlist where you can watch the entire series, me as the founder and CEO at Purdy Capital, passing our own evaluation. And yeah, other than that, if you're already trading with us, happy to have you on the team. If you're looking to trade with us, if you're still looking for like a proprietary trading firm to trade with, or you're already trading at a firm but you want a better experience, you want actual professionals working with you, then yeah, you can join our team at Purdy.com. And we're looking forward to having you on the team. And once you move live, it's going to be really exciting, because the more money you make in that account and the more consistent growth you show, performance, the more funds we will additionally move into your account so that you can grow it and earn a lot of money with us together. Thank you for watching. Looking forward to having you in the next episode.